Welcome to the newest installment of the webinar series Revenue Stream with RMS. My name is Alicia Kelso. I am a senior contributor for Forbes.com, where I cover the restaurant industry. I'm here today with a power panel to share the word on the street, what investors and consumers are thinking about dining in 2021. Joining me today's call, a name you should all know, Nicole Miller Regan. She's the managing director and head of consumer equity research practice at Piper Sandler.
Hi, Alicia. Thanks for having me.
A familiar face to RMS clients is Joel Davis. He's the Chief Strategy Officer of Revenue Management Solutions. He's also an artificial intelligence professor at the University of Florida.
Hi, Alicia. Nice to be here.
Finally, we have Andrew Reid. He's the founder and CEO of Rival Technologies, and he's going to offer some consumer research to some of the world's biggest enterprises using voice, video, and chat solutions.
Hi, Alicia. Thanks for having me.
All right, so this will be fun. Today, we're going to touch on the macro issues that operators are facing going into 2021 after this unprecedented year. And so, Nicole, let's start with you. We've been through nearly 3 full quarterly earnings reports since the pandemic hit back in March. Are you where we thought we would be in terms of recovery?
Yeah, it's a great question. I think it's just really hard to put down a guidepost and say, here's where we were, and here's where we think we would be, because it's so unprecedented. So I would say it this way. The first thing we had to figure out was how bad is it going to be? And that took a little while to see where sales is going to bottom out. I mean, never before did you see doors closed and sales were down 100%. They were 0. I'd never put that in a model before. So very, again, unprecedented. But we soon realized, we understood, okay, where is this going to bottom and how are we going to recover? And then we had to figure out how long. And it was probably the May and June timeframe that we really understood, okay, we're looking forward. There's a path to recovery. That's the second phase. And then where we are today is to understand what are the permanent behavior changes. So when I think about right now, we're in a better place. So if things, go against us in terms of mobilization and there's restrictive mandates, we're going to know part 1, how bad, we're going to know part 2 for how long. And so, what we'll figure out is how has and why has the consumer, if at all, changed permanently.
That's a good point that we know a little more this time around. So Joel, speaking of recovery, there are a number of brands, particularly in quick service, that have just thrived as though no pandemic has happened. What do you think their differentiators have been to insulate them during the past 8-9 months?
Yeah, well, it's hard to give just one answer to that question. I think, first, brands associated with takeout are doing really well. So you can think like pizza and drive-through QSR. In general, I think the ones that are thriving are offering food that really travels well. So it's portable, right? They also have a strong digital presence, and they're very familiar with who their consumers are and how their consumers want to use that brand. And they're staying on top of some of those trends in terms of how consumers might be changing week to week and even day to day sometimes. I think this is also reflected in how poorly small independents seem to be faring versus some of the bigger players. I don't think the independents always have the means to make those quick changes in their offering and kind of spin up a digital offering. And so they're often kind of at the mercy of delivery companies and those fees that the delivery companies charge. Maybe I will give one exception to that, and that's the local restaurants that have been able to offer and serve in this portable way, kind of this comfort food, right? Food that people crave during this time when they want that social connection of food and they want to live to eat, which is something we ask our customers. Do you live to eat, or do you eat to live? And a lot of people tell us that this is really an important part of the social fabric. So those small brands seem to be doing really well, as evidenced by the lineup out the door on some of those places, even during this pandemic.
Right. Okay. Nicole, if we go back to those brands that are healthy and thriving, have you seen investment priorities shift with those brands? And do you think those priorities might continue in the long term?
Yeah, I would say this. There's a difference of brand, not by investment per se at the time now, but what they were doing previously. So there's an ability to be proactive versus reactive. A proactive example, Chipotle, a company-owned model, big time human capital investments, very equal to any financial aspect that they're investing in, even digital. And not that it's good or bad, but no franchisees and no debt. So you're not dealing with landlords, lenders, franchisees, and they're playing the same playbook or executing the same playbook they would have been almost irregardless of the pandemic. Not to say they weren't disruptive, that's not fair, but they didn't have to deal with a lot of what other operators did. And so I think in that case, their investments will be the same. They'll be ongoing in terms of people, digital, and development. Others aren't ready to make those investments. They're still standing by. They're going to ebb and flow, start and close and start. And they won't be able to get back to their intended 2020 strategy until we probably get through the winter.
Okay. That one thing that you mentioned really kind of stands out with Chipotle as it applies to them specifically, because they don't have debt. So they've talked a lot about their Chipotlane specifically, and that kind of fills in nicely to my next question, which is, are we seeing concepts that have typically relied heavily on urban markets? Are we seeing a shift there because the office worker hasn't fully returned or might not fully returned? Are you seeing some of those development strategies move more towards suburban markets?
Not yet, but I think so. I think it's an excellent question and an excellent point of debate, because that's where we're at. Did the consumer change permanently? If so, how? If they're not ever going back to the office or not as frequently, do you have a store there? You probably do, but it's a different type of store. So I think it happens in two phases. Part one, anyone's development pipeline is 12 to 18 months out. There's not much they can do or should do to shift that. So it's going to be wherever they were going before. But looking past that certainly have to ask the question, what does an urban or central business district environment look like? I think people still traffic there, but again, differently. So I like to think of it almost as a packaged good, packaged foods products kind of umbrella, if you will. You have the main Cheerios, and then you have Honey Nut Cheerios and chocolate Cheerios and cinnamon Cheerios. Starbucks does an awesome job of that, right? There's like the structured, standalone, beautiful Starbucks that we're used to, but they can have like a virtual digital store, and then they can have the big flagship 40,000 square foot roastery facility and everything in between. That's what you're seeing from a Chipotle. That's what you're seeing from a Shake Shack, and all those guys that are thinking about all the variety formats they can utilize.
Yeah, interesting. Joel, with that in mind, do you think that these latest regional performance trends and developments, what are some of those as it applies to what Nicole just said? And can you share some key success strategies? Because it sounds like that maybe complicates things, is to have a big variety of real estate, for example. So what would you pull as a key success strategy as it applies to what she just said?
Well, maybe answering just the first part of your question, I think regions is the wrong unit of measurement at this time. I think Nicole's right. It's not so much about which state is doing better than others. As Nicole said, there's a lot of ebb and flow in performance, and those are based on the current restrictions and the capacity in those regions and the end of those brands to make those changes. I think the other way to think of it, like Nicole said, is urban versus suburban, and there's not always a bright line between the two. But with so many people working away from work, you're always going to see the really significant impact on those restaurants that relied on that daytime population. The ones that have been able to make the change in their operations, who were really reliant, for example, on that business lunch crowd in that urban development area, have seen a lot of pickup. So those places who are able to package their product and serve it to the people who are still living in some of those areas have done quite well. Other brands have definitely started to suffer. Okay. I think one thing, even if you think about 12 to 18 months out, and I agree with Nicole, those build out strategies are very long. I do think it's worth thinking about those build out strategies, because I think brands are going to have to be very cautious about an urban build out strategy that relies on pre-COVID data. And that's because most of that data is just not very reliable anymore. In fact, it's not reliable anymore, because we just don't know what the post-COVID behaviors are going to be. So if I was relying on building urban stores 19 months from now or 20 months from now in an urban environment that needs that lunch crowd, I think I'd be very cautious, and I'd look for some other research opportunities to learn more about how the consumer is maybe changing.
Yeah, interesting. Especially such a short amount of time getting all that data. Andrew, let's shift to you then. Based on your research that you've seen, do you think brands should engage with the different geographic customer segments based on what Nicole and Joel just said?
Yeah, I think, definitely listening to Nicole talk, thinking about, well, you're going to see the investment thesis maybe shift on how you think about things like suburban dining as opposed to the traditional investments in urban. But I think both Nicole and Joel made great comments around just that your old data, you can't necessarily rely on be making decisions based off that. You need to be thinking about all of your customer segments and really going to them and thinking about this new normal. We've got a new world where health and safety are suddenly a concern the minute that you walk into any establishment, where we also have new themes around environmental impact. We're living in a world where the amount of disposable packaging going through my house on a regular basis has changed astronomically, and that's starting to really matter to people. Then obviously the product itself. So I really am encouraging everyone to think about putting that customer first and trying to understand holistically and with a continuous mindset, because the customer mindset, I think we're seeing change almost weekly right now. And so for the next while, it's going to be about trying to make sure we're checking in, we're talking to that customer, and we're putting her at the decision-making table and making sure we're using that data to make decisions. So yeah, it's definitely an interesting place out there. And I think the folks that do put their customer first are the ones that we're going to see really emerge as real winners after this.
Okay, interesting. I'm going to shift gears a little bit here. Nicole, something you mentioned earlier, talking about the human capital piece. The incoming administration has prioritized an increase in minimum wage in the coming years. And should that come to fruition, I'm curious to know your perspective on how it could impact an industry the size of the restaurant industry.
Yeah, very important topic. Labor is 30% of most companies' P&L. So it's going to have a major impact if you shift those figures, especially up when sales are down. But thinking about it and what we've just experienced, to your point, in the last 6 to 9 months, we've learned that you have to think as customized one-on-one as possible, and everything's being done at the local, not even the state, and I don't want to say very little, but maybe less so in terms of where the change comes from at the federal level. So let's say it does happen. I think that you're already seeing restaurants take control of that conversation, and those essentially those minimum wages at a local level, and they've been doing it for some time. I mean, almost everybody we cover, in fact, everybody we cover is well above the minimum wage as it stands today. So it seems to be a very lagging indicator or lagging change, if you will. But then there's also, time to pause and think high level. Structurally, there's much more to a benefit package than just the minimum wage, right? The starting entry. And so the industry does 2 things. Number one, it gives a lot of people a first job, right? And that has to be at a minimum wage. Otherwise, the whole entire framework does not work. The second piece, however, that the industry has been tasked with and does a good job of and can always do better is creating not just jobs, but careers and lifestyles. And that's where a total benefits package comes into play. So I think, again, someone like a Chipotle or a Starbucks, they're getting good and they're getting great and they're getting better at understanding what does the employee want? Yes, they want a certain minimum wage, of course, but they want opportunity. And that comes in many forms.
Okay, that's an interesting shift in recent years. I appreciate that perspective. Andrew, and you kind of touched on this earlier with the discussion on the environmental impact that we're seeing, and on the heels of this minimum wage discussion too. I'm just curious, from your research, do you think younger consumers care about what brands are doing and how they're approaching these sort of macro social and environmental issues? And if so, are these efforts actually affecting their impact or their purchase behavior?
Yeah, it is. I think they do. I think younger generations definitely do care more and more. And it's an interesting kind of dangerous game in the fact that that it's one thing to pay lip service. You've seen some brands, make stances and say things, and when those get stress tested, when something fires up on social media about, something going the wrong way, that's where the authenticity shines through. So I think the brands that really want to take specific stances when it comes to social responsibility, those are brands that need to sort of, they can't just say it, they need to do it, and you need to do it with a certain amount of transparency so that people really believe it. I think the environmental impact thing is the same thing. There's a difference between how do I tick the box and be able to publicly say that we're doing something that matters versus a company that through and through really cares about social responsibility or really cares about the environment and the impact they're making. And so I think the ones that this is a game that if you want to be involved and take a stance, you need to make sure you're doing it with a certain amount of authenticity and you're pushing it all the way through your organization. Nicole's comment about Chipotle, I think, was interesting because that's where she started it. I mean, it was that supersedes the finance side and a lot of other areas of their business. Is the human capital that they invest into their people and the culture that they have there. So yeah, it's definitely something that I don't think it's just young people. I think we're just seeing more and more people become aware of this. And for some folks, this is really, they put their wallet behind brands that they feel are doing the right thing. Not everyone, but we're seeing an increased amount of people that feel that way.
Okay, interesting. And I don't want to, I'd be remiss if I didn't tap into Joel's specific area of expertise here as it applies to that minimum wage discussion specifically. Would a minimum wage increase, in your opinion, lead to a greater adoption of automation?
Yes. So you probably want some more than that. I always struggle to answer this question briefly because it's an area that I'm so interested in and I'm so passionate about. But I'll try to do this in 30 seconds or less. Let me just say that automation is coming no matter what you do with minimum wage, and very specialized and narrow jobs are going to get automated first. So whether that's robots in the kitchen chopping up a salad, which is really terrifying if you think about it. Or algorithms which predict which new menu items should be on the drive-through board as you go through it, and those will be reducing the amount of employment opportunities in those spaces. The simple economic argument here is this: as the cost of automation goes down and the quality of that automation goes up, then the value of the substitute, in this case that's human labor, right, goes down as well. So there's less human labor in that chain, and I think that's going to happen in the restaurant industry. I also think, it's likely we're going to continue to see this in very unique ways. I don't believe we're going to see, a new minimum wage, legislation come into place and a bunch of layoffs happen in any industry. I think what we will see is as a recession comes along and as layoffs then take place and belt tightening happens in a certain industry, those jobs just don't recover as much. So we see more jobless recovery. And this is not going to be unique to the restaurant industry. I think we'll see this across every industry.
Okay. Thanks for that. Nicole, I want to shift back over to you. We've seen, table service restaurants especially impacted throughout this past year. And we've also seen, a lot of companies become pretty nimble in response, adding curbside and delivery, and some are even adding, walk-up windows. Do you think that those shifts, some of these changes that those table service chains are making, is that helping with investor confidence?
Oh, absolutely. With investor confidence, sure, because every extra dollar you get gets valued and absolutely makes people understand that the consumer intends to eat out, and that makes investors feel good, and that makes stocks work. So certainly. It goes back to your very first question that you asked me today. I mean, that's understanding the permanent behavior shifts, and this seems to be one of them. So the trick is, how much do you invest there to understand what I think at some point the customer also comes back and sits down in that dining room. And so I think these are permanent options that don't go away. They get better at them, and they live in the future of restaurant dining. But I also don't want anyone to think that we're closing down dining rooms permanently. Mm-hmm. We probably closed down limited service dining rooms for a while. And you saw that even in cases where you could reopen, You'd have reopening signs, but it didn't mean the dining room with the drive-through attached was open. In fact, most likely it wasn't. However, what we see in our own survey work is that a lot of what Joel says. I mean, Joel taught me, like, get the data and then figure out what to do with the data and understand it. And those are the two most powerful things I think any company can do today. But that being said, the little bit of data that we work with says, and I even hesitate because Andrew and I were talking the other day, we're not really looking at teens versus millennials, like generationally, because the response to COVID is so individualized. But I will say the pre-pandemic data said, teens, they grow up, become millennials, young adults, and they go from limited service to full service. And I don't think that should surprise anybody. And this delays that once again, but it doesn't change the fact that they will end up eating in the dining room.
Okay, that's interesting. And I appreciate that because that makes a really smooth transition into my next question for Joel. As we talk about some of the blurring of the generations and some of the blurring of the segments, Joel, can you tell me, are dining concepts, in your opinion, are they going to have to adjust their expectations because we've seen such a huge consumer shift to ease, contactless, convenience, speed? The drive-through is obviously king. How are dining concepts going to have to adjust to fit that consumer shift, if at all?
Yeah, I think I'll start by saying I think they have adjusted their experience, and some of those adjustments that they've made are here to stay. I think Nicole makes a good point. Exactly which ones are here to stay, which ones of those are sticky, and how sticky they'll be. I think that's yet to be determined. But many of those adjustments they've made are not going away. It's obvious we're going to have more people working in more places soon, and exactly how that plays out, it's just too early to tell. I think we're going to continue to see innovation, especially in that upscale market. With the continued emphasis on making their food portable, I think that upscale market has done a really good job with that. And that's a channel they're just not going to walk away from when this is done, right? They're not going to go back to just having people in seats. They're going to be, exploring all these other channels and kind of growing their distribution in that way.
Okay, and that was one of my questions: is how will the fine dining, specifically the fine dining segment, be affected? Is that what you're saying?
I think they've already made the changes. In many cases, they've already made the changes they need to make. The question is how much they need to pull back from some of those changes in the future as people look forward to going back to that social experience. And then how much does that delivery channel, for example, erode the brand's market presence or market awareness? Does it actually grow their presence? Does it grow awareness? Or does that erode from who that brand actually is? A social experience where you go and dine with friends, for special occasions. And I think that's yet to be determined, but I would be very surprised if those upscale brands entirely walked away from these new channels that they've developed over the last several months. Right. There's just too much there.
Okay. Andrew, sort of along these lines, have you seen actual brands gain affinity with younger consumers because of the efforts, the convenience and safety efforts that they've made, in response to the pandemic? And if you can, conversely, have you seen any, maybe lose ground because they weren't doing enough based on your research?
Yeah, for sure. I think I wanted just to comment on Joel's, what Joel's just saying, which was interesting, that, I'm seeing, my favorite upscale brands, able to offer cuts of meat and being able to creatively take their supply chain they've been curating for so long and be able to leverage that in a whole new way. So, I was saying to my wife the other night, like, I hope that when this is over, I don't have that, I have this option on, when I'm ordering my DoorDash from my favorite restaurant, where I'm ordering my dinner and I'm ordering a bunch of groceries at the same time. And those kinds of innovations, I hope, are here to stay, because that is a really interesting way to creatively drive revenue and to take advantage of all that supply chain and keep it going. So, but to your question, you just asked, I think we are seeing this sort of new tier of consideration. A year ago, when you got your food in your to-go bag, or you went and got your food, is, are my fries soggy? Are they warm? Are they salty to the right level? Now it's, first of all, do you pass the safety and cleanliness test, and am I comfortable being there? And then the product still has to be good. Those fries still need to be hot. They still need to work the same way. So, I think we're seeing this change, and it's not just because of younger customers. They're helping drive a lot of it, but it is more global, and it really just means that the consideration set we have to, there's more brands have to take on than just the actual product and delivery of the product itself. So that's what we're basically seeing right now.
Okay, well, that's interesting. Nicole, I've done so many stories in recent months on the growth of delivery and the dizzying pace at which it's grown, and in some instances in markets by triple digits. And that applies to off-premise in general, curbside pickup, all of it. Do you expect this staggering growth to sort of correct itself? Or, I mean, what are your expectations on the other side of this as it applies to those numbers correcting themselves? Or is it going to continue to be a material part of these businesses?
A material part, yes, but a correction, I certainly hope so. I mean, if not, that's really not good for the restaurant industry. So we have to see a correction, and I think we will see a correction. If we don't, that implies that their biggest rival is the grocery store, almost, and we're going to eat everything at home. Maybe where are you going to socialize? Like, this doesn't make us feel any better about going to the mall, and that's why we socialized before Amazon. And the restaurants didn't get Amazon because you can't eat online, at least not yet. But I mean, my goodness, we just accelerated trends by 3 to 5 years. However, it's going to level set. It has to. I hope it does. And what I mean by that is, I hope that that customers are out and they spontaneously pick a restaurant and drive through or sit down and stop in. I hope and believe, like Joel and Andrew are both saying, we're experiential, basically behavior is ongoing, and where better to do that than in a restaurant, and that's where you socialize. So we definitely went from, experiential to dining to social distancing, but I think we'll reverse that trend. That is not to say we'll go back to zero in any digital sale, any delivery sale. But I think at some point it will go down a lot, like just the opposite of vaccines go up and shouldn't delivery go down? Something like that I think will happen. And at face value will look like a lot. And I think like everything else, it will level set to a normalized amount.
Okay.
Maybe I can just build on something that Nicole said, which I think is quite interesting. I actually think that quite often we're talking about, will the restaurant industry recover? Will it get back to where it was? And I don't think that should be their target, right? I think they should be targeting something much higher than that. And it's because of something that Nicole said. If you don't remove those other channels, if you continue to deliver, like Andrew was saying, if fine dining continues to deliver my steak when I really want to take it and I really want to eat it at home, and I still crave those social experiences and I still crave, that closeness with others, then there's no reason why that sit down dining at that upscale restaurant shouldn't be maintained at what it was pre-COVID. And they should have all these additional channels, to bring in the money post-COVID. So I think, I think people talking about, will it recover? I think if the restaurant industry is not targeting, a significant increase in that, because they should be taking share from other people, post-COVID, because that social experience is very real. I think that's a really important target for them. But I don't think many of them are thinking that now, because it's just too, right now it's too raw.
Right. That's a good point. I do want to kind of staying in form on delivery, and we've talked a lot about Chipotle on this webinar. They're the perfect example here of a chain that is experimenting with higher menu prices to offset, high delivery fees. And we saw that during their last earnings with their profit margins were down. Do you think that this could deter delivery, be the cause of that correction? Or are we at a point now where consumers are just willing to pay for higher menu prices on top of fees?
Yeah, I think that question was for me. And consumers are telling us that they expect to pay something for that service. So, similar to the prior comment, I think that's something you have to watch really carefully, and you have to stay, Andrew mentioned this, really close to your customer to understand. That premium is something you need to watch and manage over time. And as the restrictions ebb and flow, you're gonna have to manage that new normal to see what that pricing gap should be. I think right now those higher pricing gaps are accepted in some markets, not as accepted in others. And so I think you really do need to pay attention to the data and what your customers are telling you with your ordering patterns with those delivery prices. It's a very double-edged sword. You should be able to charge more. Consumers say they can charge more. They don't always accept more. So it's something you have to measure constantly.
Okay, interesting.
Well, and just real quick on that, it's how you do it. I mean, listen, Joel's the expert on the pricing advice. I'm only saying, what I see out there, but I don't want anybody walking away thinking they just jacked up prices. That's not what happened at all. What they did is realize that there's a huge opportunity, and the opportunity is cover your costs in the marketplace. Why not? And push every guest to your own app. Keep the relationship, keep the data, keep the pricing equal to the store. And then they do special things like put the quesadilla, which is relatively complex versus a salad bowl, through that system so you can only get it one place. And that might cost a little bit more, but net, it depends on where you're going. It determines how much you're paying, or vice versa.
Mm-hmm. Yeah, that's a good point. I'm glad you clarified that, because it does seem like a really good solution here for what they're having to navigate with higher delivery orders. Andrew, based on your research, I want to know what you're seeing, toward delivery with the consumers that you research specifically.
For sure. So we've done some research recently that showed that 52% of Americans are saying their eating habits have changed, which is no surprise. And they change, and opinions are changing so rapidly. So like in the middle of the summer, we did some pandemic research that showed that 66% of customers are more comfortable grocery shopping and cooking at home versus ordering from restaurants and going to restaurants. But this is changing so fast. So this is something that we did, I'm quoting some research that's from August, which in normal times wouldn't seem that far away. That seems pretty far away now. And so I've shared Nicole's sentiment that I hope that we do see that comfort level increase with people going back and socializing and dining in. But there definitely is some shifts that are happening. And again, this is where this idea of continuous discovery, of continually going in and checking in with customers and doing it in a way where you feel really good about the quality of data that you have is hugely important.
Right. Okay, Nicole, I'm going to pick your brain again because of your unique perspective here. What consumer-related questions are institutional investors asking you when you speak about restaurant brands, and what are you seeing emerge as their main concerns at this point?
Yeah, great question. I would say one that is probably obvious, and then something that might surprise you. The obvious is, who's going to win, and not just survive, but win and take share. It's, as Joel described, is exactly what's going to happen. It's going to happen for the reason he expressed. It's also going to happen as a function of some restaurants don't make it, and someone, can and should take up that share. Don't let the grocery guys get it. Don't let those dollars go back home. So there's plenty up for grabs. We're typically talking about at scale, global footprint, who has the team to get the data, understand digital, and do it the right way, and who can accelerate development. If you can accelerate development coming out of this, you're gonna win a lot faster and a lot bigger than the others. The one that might surprise you, however, is who's little, who's small and emerging. We are in a consolidation cycle that's only getting amped up in our industry. It started around 2016 on consolidation by way of M&A. We lost 30% of the stocks that would be publicly traded in restaurants, and half of what are left would be defined as microcap. So investors, it's very scarce. There's a scarcity value, a scarcity premium in the valuations, and they're looking for the next generation leader. So they're very, very interested in studying private emerging concepts.
That's great. Good to know. Joel, we touched upon the differences between generations and how they all sort of merge together. But I am curious about something because we saw a bunch of research pre-pandemic about how the younger consumers, the Gen Zs, the millennials, were digital natives essentially, and there was a schism in digital adoption between generations pre-COVID. Again, have those younger consumers, have they changed their behaviors during this, for example, as much as the boomers have?
Yeah, I think what I would say is that everyone has changed their behavior. So the entire the entire marketplace has shifted in one direction, and so I think sometimes we overweight the answers that those Gen Zs and Gen X givers, or survey takers tell us, because they're just so prevalent. They were already in digital, and so they're just more in digital now. But I think everyone has moved more in that direction. For some people, the friction to get there was a lot less, and so they probably did a little bit more early on. But I think they're kind of catching up now. Maybe building on that, I think it's when you think about the habits of these different segments, I think Nicole had that right earlier. It's I sometimes think it's too easy to think about the generation Z or X or millennials, and it's more helpful to consider, like she was saying, where these consumers are in terms of their timeline, in their life milestones, things like marriage, kids, moving to the suburbs, going from from fast casual to fine dining. These are shifts that every generation makes, and I think what we're probably seeing is a pause for some of those people moving in some directions, and an acceleration in other cases. So there is a schism now, but I think it's probably in their timeline of life, and how this affects that timeline is yet to be seen. So I think that's going to be an interesting trend to watch for, in the future, is what really happens to those milestone moments. Has there been just a pause for a year, or have some of these really accelerated? And I think we're going to see both in some interesting ways.
Okay. Andrew, I'm curious to know, one of the things that's kind of stuck out to me during this conversation is that going back to that data and how much there is now. And I think restaurant brands were trying to figure out how to manage all that data pre-COVID, and now it's almost a mandate. I'm curious, from your perspective, with that being said, how have you seen restaurant brands shift how they are engaging and communicating with customers because of this?
Yeah, I mean, I think they're having to rethink the experience. You got to do, this is not for the weak. This is definitely for those that are strong and that are willing to be creative, and really rethinking overall their offer, the messaging hierarchy you use, of how you communicate with customers. I think that the top of that hierarchy is now cleanliness. I mean, I think the good news for all of us is, guess what? That gross, disgusting restaurant that maybe had great food, but you kind of had that moment when you get in and you want to bring your own hand sanitizer out or your own wet wipes out to clean off, that restaurant's going to change. There's going to be a new levels of standard that we're all going to have. Are people going to go back and sit shoulder to shoulder packed in the bars? Probably, but it's not going to happen as fast as we want it to. I think this idea of community outreach and empathy is very important for brands. And again, that is about this whole idea of that we are in this together, and this sort of sense of unity. And the brands that actually embrace that, I think, will make a significant impact, and they'll be able to feel that impact. And I think this is a very personal experience everyone's going through. And so the more you can amplify your sense of personalization to your customers, I think you're going to see that a good direct correlation. People are going through something intensely personal. The more they can feel like that brand they care about is giving them a bit of a personal experience, I think you're going to see be a leading indicator of brands that are going to win throughout this.
Okay, well, that's interesting. Let's take a minute and go back and kind of summarize some of this. I want to take a look back at this conversation, and Nicole, I'm going to start with you. If you could sort of summarize, some of the key takeaways and challenges that restaurant brands have, based on what we talked about and other things, as we enter 2021. I'm really curious to know what your thoughts are.
Yeah, I mean, it's still the year of the restaurant. It is all about culture and capital. You have the team and you have the balance sheet. You're coming out of this. Like there's zero doubt. And those are measurable things. Ask the right questions, you'll get the right answer, and you'll make the right investment. I don't think there is any challenge beyond the obvious. I don't want to not appreciate those challenges and respect those challenges. So be nimble at opening, be nimble at closing would be an example. You got to do it fast and you got to do it right. But at the end of the day, the only mistake a restaurant can do is giving up those sales that have been ceded to the restaurant, to the grocery channel. So, that was always 50-50 in terms of the dollar spent on food. It probably got as high as 60-65% in favor of grocery. And one thing I'm really proud to be, just even as an analyst, part of this hospitality industry, is the way the group has really gotten together and said, we are a safe place. Come to us, consumer. And that could mean going to the guy next door or the concept down the street. Just come to a restaurant. The restaurant industry has done that better, or as well, if not best or better than any other industry. And what I mean by that is they're not trying to claw all over each other to get that sale. They're just saying, we can get all of those dollars when you try cooking at home and you don't like it so much. Come back to us. We're safe. We're here for you. We're going to be here. And that is the opportunity.
Yeah, I love that, Nicole. And I agree. It's been kind of inspiring seeing some of the camaraderie, not just with restaurant companies, but restaurant adjacent companies. Joel, what do you think? What would you describe as some of the key takeaways and challenges for restaurants going into 2021?
I'm going to build on something that Nicole said again. I seem to be doing that a lot today, but I think, I think being nimble is really important. And maybe I'll pick that apart a little bit and just say, I think that, restaurants really need to look at their decision-making processes. That's every restaurant from really small to really large, how they make decisions, on what basis they make that decision. So that's, the data that's coming out of their registers in their store, but also to Andrew's point, what they're hearing from the consumer. And they need to be a lot faster and better at integrating all of that information. The people that have, culture was a word that Nicole used, the people that have the culture of making fast decision-making based on the data in front of them are going to come out this very strong. And those that don't will fail to see the shifts in the marketplace as this ebb and flow continues, and they'll fail to capitalize on those shifts. So I think that being nimble with their decision-making is a key competency that I think everyone is going to have to develop.
Okay. And Andrew, let's finish strong with you. What do you see as the biggest takeaways and challenges headed into the new year?
Yeah, I think there's 4 or 5. So one, as Joel said, and we've all been saying, remain agile. 2, continue to explore new revenue streams, which everyone's been talking about on this panel. 3, care about the data that you're collecting, about the quality of data. Is there opportunities to get feedback right in the moment? That is when you want to be talking to people, and it really matters. When you sending someone a follow-up survey 2 days after they had an experience in today's world is not cut it. You need to be finding ways right then and there in the moment to be getting that, and to really want to have that feedback. It's funny when you talk to some, a lot of people, they want to hear the good things, not the bad things. You want to make sure that you're really taking that feedback seriously. And then the last one that I touched on earlier is this idea of maintaining a connection in the community, fostering and nurturing that sense that we're in this together. If I had a restaurant, I'd be looking at finding ways to keep my customer engaged and ensure that I am listening and learning and being led by them every way possible.
Okay, well, that's all I've got. You guys, thank you so much. This has been a great conversation. I certainly appreciate all of your insights. As for everybody else, stay up to date on the webinar series Revenue Stream on revenuemanage.com.